Another insane run for Gevo. Will we pull back now, or can we still get one more run? Welcome back for another Gevo technical analysis update. This is Dr. B on Webull, and I will talk about the recent run by Gevo and what to expect next. Remember, the technical analysis you are about to see in this video is live streamed during market hours, showing the price moving between the support and resistance trend lines and levels. While we are tracking the movement of Gevo and other stocks like NEO, we are discussing stocks on our free Discord server. Subscribe to get notification when the live streaming starts and check the Discord invitation link in the description below. I will start with the monthly with a very interesting but super speculative observation. If you remember, in a previous analysis, I mentioned that the conversion and the baselines of the Ichimoku cloud never got that close since 2012, except once. Well, after the last week's action, they are now intersecting. What does that mean? When the conversion line goes above the baseline under the cloud and while the lagging span is above the price action, that is usually a weak buy signal. Ideally, you want this to happen above the cloud, which gives you a strong buy signal, but in case of the monthly with Gevo, we should be happy with it happening anyway. The cloud is huge, but it's getting smaller. Now, if you also watch any of my other videos, you will hear me repeating that the Kumo cloud usually acts as a strong support and resistance. Since we are below it, we can expect it to act as a resistance. But if we get enough momentum as we expect for Gevo in the next few years, we may start to penetrate that cloud. Let's consider the worst case scenario. We get to the cloud and then it acts as a resistance. Do you know what price level we can get to before it rejects the price? $8 by May 2021. In other words, Gevo may double in the next 5 months. Not bad, right? Well, as I said, this is speculative and may not happen, but it's a possibility. So what we want to do is not to sleep and dream about the 8, but to actively monitor Gevo and make sure it's heading towards the cloud over the next few months. If not, we adjust our strategy. And we start now. Alright, so let's look at the weekly chart. We are above the cloud and the conversion line is above the baseline. That's good. The lead 2 is at 2. The lead 1 is at 1.32, similar to the super trend line and the middle band of the Bollinger Bands. Above these levels, we can see the middle band of the Donchian channel indicator located at 2.39, which also acts as support and resistance. What is even better is that we have already touched and bounced off of it over the last month period. What this usually means is that we will continue to push it up and walk along the upper line of the DC indicator. The Bollinger Bands seem extended. Unfortunately, we don't have any way to know if this is a wide enough or not, especially that we don't have history of a Bollinger Bandwidth indicator in a bullish trend like this. I don't like that, but we are not above the upper band, so there is a possibility that we continue to push just a little before we pull back. Also, as we progress and start to drop the older lower weeks, the value of the bands may go higher. RSI is oversold for the first time since 2011. The RSI went over the 70 with that margin, but I'm not worried about it because we are reversing. We got a strong trend and I have seen RSIs hitting 90 before they drop back. The EMAs look great. They are gaining higher slope and the 20 EMA getting ready to cross the 50 EMA. We have a strong trend that will probably take the 20 EMA over the 50 EMA. The DMI looks glorious, higher highs in the buying pressure and lower lows in the selling pressure, and ADX that is in the 44 range and pointing up, telling us this is a very strong trend and momentum. On the daily, we have a new channel, again because Gevo continues to break our channels, which is fine, no complaints. Most of the indicators look like the weekly, IC is good, DMI is good, and the super trend is green and going up. RSI is oversold, but we have seen higher values before. We are walking along the upper line of the Donchian channel, and also we are above the Bollinger Band. And last Thursday's candle is a candle with a long upper wick, which looks like the candles at the top of the last few runs before it drops again. It doesn't look good, but in the first run, we had an offering. In the second run, the candle was completely detached from the upper Bollinger Band. So they were two completely different situations. Also, the Bollinger Band bandwidth is way lower than the bandwidth of both runs. What is even more significant for me is that the EMAs look completely different. The previous two runs, the EMAs were concave, while now the EMAs are convex and have a steep slope. Another thing to keep in mind is that Thursday was not a normal trading day. If we overlay our charts, we can see that we hit the 78.6% Fibonacci extension level and then dropped all the way back to the 50% extension level. So on the daily, as a conservative expectation, we may see the price moving in the range between 3.7 and the 4.32, and maybe close somewhere at or below the 4.15, which is the outer resistance level of the channel we are flowing in. If Gevo decides to break our channel again, we may see it test the 4.8 and even close somewhere between 4.32 and 4.8. Okay, so what makes me feel that we will go up even though we seem to be pushing the envelope and need to pull back sometime soon? So let's have a look at the lower time frames. On the 4-hour chart, we can see that we closed above the inner resistance level with a hammer candle. This is a bullish candle and means we may go up. Also, we just bounced back off the middle line of the DC indicator. On the 2-hour chart, we can see the bearish tweezer top 2 candle pattern, followed by a drop, but then the green candle is a hammer, which is bullish. Pushed the price back up a little, but then we closed with an indecisive candle, which means it can go up or down. But keep in mind that this is a candle of the after hours on a day before the Christmas, so I'm not really sure how to read that. On the hourly chart, again, the tweezers top, drop, push back up, and then some rejection of the higher prices. However, we closed above the inner resistance trend line of our channel, which is also the outer support line of the small upward channel. So that may indicate that we are going to hold and go back up. Lower time frames are showing the bounce, but honestly, I don't like the candles not being super bullish and showing rejection of higher prices. So I would be looking at the 3.75 with a possible dip to the 50% Fibonacci retracement level at 3.7. Below this may indicate that the small upward channel is broken and the pullback is happening. In this case, we will be dropping towards the median of the channel at the range of the 3.3 to 3.4 levels. In conclusion, I feel we can still push higher, but also not ignoring the possibility of pulling back. So I will be watching the levels and how Gevo moves in the pre-market. If you also want to see the price moving between these levels and see my comments on it tomorrow, subscribe, join the live stream and our Gevo Discord channel where I live comment on the price action. Thank you for watching and I wish you a fantastic week of trading.